It's a pleasure to welcome David Levenstein to join us today to talk a little bit about the precious metals market. David Levenstein is a precious metals analyst from Lakeshore Trading. Welcome, Dave.
Thanks for having me, Evan.
Okay, we've had the Japanese market losing 20% in the last week in light of the earthquake and the radiation and obviously the nuclear stations, and we've seen the markets becoming very jittery. But the flip side of that is that the commodities markets have been increasing in lieu. Dave, what does this crisis mean? I think the Middle Eastern situation also ties into this. In light of the crises, Dave, where is the gold price headed?
With regard to the crisis in Japan, what we've seen is tremendous volatility in the currencies, in particular the Japanese yen. At one time, the Japanese yen soared to practically an all-time high of roughly 76 to the dollar, and after the bank intervention, it rallied back up to 81. Well, dollar to the yen was 81. The interesting thing about this is that Japan at the moment has weak economic growth. It has debt to GDP of approximately 200%, low interest rates, and the country's now been hit by a series of devastating natural disasters. Under these circumstances, normally a currency would not be strong. So it's very unusual to see such a strong currency in this particular light, which leads me to believe that what we're really seeing is tremendous weakness in the dollar. And when we look at the dollar index, we have seen the dollar index trade close to the 75 level, which was the last support hit in November last year. This is a very precarious situation, because if it breaks through this level, I think the dollar could fall quickly and hard, talking roughly about between 8 to 10% in the short term, which of course would be good for gold. But in addition to that, I don't see the euro as a strong currency either. We have so much sovereign debt. In fact, as you know, rating agencies such as Moody's recently downgraded the debt instruments of Spain, Portugal and Greece. So I think both these reserve currencies, the US dollar and the euro, are headed lower. But in addition to that, because the Japanese yen is so strong, I believe it's overvalued now, and I see it heading down lower. This tells me that the three major currencies are all headed down lower, which tells me that the gold price is headed higher.
Warren Buffett from Berkshire Hathaway, one of the world's best investors, is calling Japan a tentative buy at this juncture. Some other reports have come out saying that the fall in the Japanese market of 20% is a little bit extreme, and that there will possibly be some buying opportunities going forward. But we're talking equities there, of course. But I think on the gold front, what about the demand? Is there certainly an increase in demand at the moment for gold?
Interestingly, you know, the demand for physical gold is still extremely robust. During January and February, China bought 200 tons of gold, and this was practically unnoticed by mainstream media. This is a huge amount. In the 10 months of last year, their total imports were around about 209 tons. So in the first 2 months of this year, they've imported 200 tons. We've seen the Central Bank of Russia come in as buyers again. In February they bought 100,000 ounces. They didn't buy anything in January, and last year they were a consistent and regular buyer of gold. So these two main players continue to purchase gold, so demand from them is extremely strong. But in addition to that, Turkey, which is the fourth largest consumer of gold, they anticipate that their imports of gold this year might increase by about 50%. Last year they imported roughly about 40 tons of gold, and they have seen that increase to around about 60 tons this year. So if you add that to strong investor demand as well, I think we're going to see very strong demand for gold this year.
The gold price is over $1,400 an ounce. Have you got any predictions for us?
At the beginning of the year, my target for the end of the year was roughly $1,750 an ounce, and I still believe that we are going to see that. In fact, I think we're going to see $1,500 an ounce relatively soon.
We're talking demand for physical gold over here, and not necessarily the gold miners themselves.
Yes, that's correct, Evan. Mining equities are a different investment vehicle related to gold, but it's not the actual, you're not buying gold when you're buying mining shares. You're buying a company that's mining shares. We're talking at the moment physical gold bullion.
Sticking to the precious metals basket, the silver price has certainly been very interesting. It recently had a bit of a fall, and I see it's starting to move back up, Dave, around the $36 an ounce marker. What is your sense of...
The recent fall that we saw in silver was the metal reacting to the Japanese crisis. When that earthquake hit Japan, as you know, most global equities fell, commodities fell, practically everything fell. Silver didn't escape that. It pulled back to 33.50, which is very interesting because that level represents a 38.2% Fibonacci retracement of the move that started at 27 in February and ended at, started at 25 in February and ended at 37 in March. So I believe that correction at 38.2% Fibonacci retracement has completed the correction. As you know, as you said now, silver's back up at 36, so I think we have corrected in silver, and I believe the next target will be about $40 an ounce, which I think we will see probably within the next 6 weeks to 8 weeks.
In the silver market itself, Dave, what is the actual supply position at the moment?
Supplies are extremely tight at the moment. There's shortages of silver bars. There's been delay from several of the major mints regarding the silver bullion coins. There's a delay with the US Mint on their Silver Eagle program at the moment. And interestingly enough, if we look at the Silver Eagles, sales to date from the US Mint of the Silver Eagles are roughly about 11 million ounces. Last year, for the full 3-month period from January to March, the total sales were 8.8 million. So already there's about a 25% increase just in the silver bullion coins from the US Mint. If this demand continues, I mean, demand for the Silver Eagles could possibly exceed 50 million by the end of the year. I don't know if they'll even have enough silver to produce the coins. But in addition to the coins, there is strong demand for silver. Industrial applications are set to increase by about 6 to 8% this year. So, demand for silver is very strong and supplies are extremely tight, which leads me to believe that we're going to see much higher prices.
Well, thanks very much for being with us, and thank you to Dave Levenstein for joining us. Dave is a precious metal analyst from Lakeshore Trading, and I think certainly this precious metals market is going to be one to watch, and certainly the crises are leading to a lot of risk aversion in the markets, and a lot of investors are certainly watching the commodities basket as a whole